Welcome back. In today's video, we're going to be discussing the recent drop in prices across the board in cryptocurrency, as well as crypto-related stock. I mean, really, many stocks, many big stocks, including Tesla, have come down fairly substantially as we are entering the March timeframe, and therefore the end of Q1, also entering tax season. And so this massive sell-off has created a lot of panic. There's been a lot of people, Cryptoviser, what's going on? All these YouTube channels freaking out about where the market is. Listen. Do I think that we are closer to the bear market than we were a few months ago? Of course, because the closer we get, the further we go away from the bull market, right? And so I do still think that we're going to see major moves to the upside, hopefully at least this year. When? I don't know, but that's what we're going to be kind of discussing today. We're going to kind of break down what is going on. We also have some really good news about Internet Computer Protocol, really good news about Avalanche, cryptocurrency, and some other news that we're going to be talking about, like banks buying or getting into crypto and launching their own cryptos. But the crypto market is seeing a tactical retreat and not a reversal, according to the current Binance CEO, Richard Tang. He says that crypto markets generally bounce back with remarkable resilience after volatility due to macroeconomic events. And so we've seen many cryptos come down. I mean, in the grand scheme, not that much. I mean, 10, 15, even 20% is not that much. If we see them come down 40% in a day, yeah, that's probably the major capitulation point. But 10%, guys, this is normal moves in crypto. At least it was before the ETFs started. Sorry, had to refresh to get through that very large ad. So basically, when we look at the ETF outflows, this is something that I've been theorizing on this channel, and we're starting to see it play out a little bit. That the Wall Street, the large financial firms, these guys are the ones who are now controlling where the market is and where the market is going, and we can see that here, right? We've been seeing kind of little trickles at the beginning of February. You can see here this negative number here. This is the totals section of the chart, and this total section shows you in dollars how much was either entering into the Bitcoin ETF or exiting out of the Bitcoin ETF day by day total across all the Bitcoin ETFs. And so you see, 200 million here, 250 million here, 150 million here, and 60 million, 60 million. 360 million back to 60 million, and then boom, 539 million removed. $1.1 billion removed in one day. And so when we look at the markets and try to understand, like, why are they selling? Is it just fear in the market? Is it just global macroeconomic situation? Is it because the stock market's also selling down? Like, why are we seeing massive outflows? Because keep in mind, technically the way the ETF works, like in the most basic form, right, is if you have a share of the Bitcoin ETF, you have a piece of Bitcoin, right, the underlying asset. So if you go and redeem that share with the ETF issuer, or let's say sell that share, and the ETF issuer buys it, right, basically then they go and they burn the coin, they sell the coin. So what we're seeing here is outflows. And why are we seeing these major outflows? Well, we know MicroStrategy just bought $2 billion worth of Bitcoin over the weekend, and no movement in the price except to the downside. We also know that because of the Bybit hack, there was a bridge loan of something like 80,000 Ethereum or 30,000 Ethereum, something like that. And they've already paid it back just 3 days after they took the loan, which means they were buying basically $1.4 billion on the open market. Where were they finding the liquidity for this? Well, we also see liquidations when people are over leveraged, and there's some kind of theories on social media that the exchanges are involved in kind of helping push the price down. That way, they can the other exchange Bybit can then go buy it back at lower prices. Listen, I don't know whether that's true or not, but basically that's what happened, right? Bybit got hacked. Prices didn't really move at the hack, but then afterwards, in the days after, we saw major price moves to the downside. And so they were able to, Bybit said that they were able to cover the hack fully, $1.4 billion in Ethereum at those price levels. Ethereum went down $300-400 since those price levels just in the last few days, and now Bybit has recovered all their money. They probably saw the big dip in the market and said, you know what, we're just going to buy this because this is even cheaper than when we were hacked, so we can get these Ethereum back. But basically, what we saw in the over leveraged markets, people who are trading, is that they got wiped out. They got liquidated. And when liquidations happen, right, it's a market order sell from the exchange or the brokerage. They market order sell it. And so market orders also can push the price much lower. And then that creates more liquidations, more market orders, more pushing price lower, then more liquidations, then more market orders, then more pushing the price lower. And then it just keeps happening. That's why there are circuit breakers in the stock market to slow everything down, slow the bleed. In crypto, you could claim that the exchanges are basically the circuit breakers when needed. The exchanges just, oh, we're having some delays and all of this. Yeah, okay, whatever. Anyway, so this is really important to understand, right? Because what the ETFs are doing now is also showing us kind of what is happening in the market. But let's be clear, the money that is in the ETFs or has been in the ETFs, this is really big money. Like this is institutional money. This is pension funds, sovereign wealth funds, other large major corporations, et cetera, right? This is big money. So when I see all of this money coming out in just this month, right? 200 million, 200 million, 200 million. So that's 600 million plus another 500. So it's a billion plus another billion plus another 300. So basically 2 to 3 billion dollars exiting the Bitcoin ETFs just in February. Just in February. And we're not even looking at January right now. And so where is all of this money going? Is it just sitting in somebody's account? Is it going to other stocks? In my view, yeah, it's just sitting in somebody's account, right? Whether again, it's these sovereign wealth funds, these retirement funds, pension funds, governments, whatever. They're holding on the money. And what are they holding on for? Well, potentially better prices. And so earlier in the month, we were at $100,000. Now we're at $87,000. It's a 10-12% drop in the price. Maybe we'll go to 75,000. We talked about the other day potentially even going down to 50,000. This could be a huge discount for them to buy back in at. And so when that buying occurs, who is going to be the liquidity for the selling on the sell side? Because keep in mind, right now, the liquidity on the sell side is the Bitcoin ETFs. This is why the prices are going down, because there's not enough buyers buying as we're dropping. That's why the price is dropping. And the Bitcoin ETF issuers, I mean, $1.1 billion on the 25th of February, $1.1 billion in outflows out of the ETFs. All of the ETFs had major outflows. And so the reversal, I think, is going to happen similar to what the CEO of Binance is saying. It's going to be just as volatile to the upside as we're seeing volatility to the downside. Because when the big money, when these ETF issuers are ready to repurchase the Bitcoin and start buying up the Bitcoin ETFs again, who is selling the Bitcoin? Right now, we know they are selling it. But when they're ready to buy it back, who's selling it? Right? Because who bought their Bitcoin? Well, maybe Michael Saylor bought some of it through MicroStrategy, right? But he's not selling any. So when the Bitcoin ETF issuers and the big money, and maybe this is a learning lesson for them as well, when they're ready to go back in the market, if they put a $500 million buy order in across all the ETFs in one day, the price is going much, much, much higher, in my view, because there's no liquidity besides the Bitcoin ETF issuers. Where is all the money? Where is all the Bitcoin coming from? This is what we kept asking with MicroStrategy, right? They keep buying Bitcoin and the price is not going up, meaning there's enough supply at the current prices. Who is selling thousands and thousands of Bitcoin at $100,000? Who's doing it? Maybe it's the Winklevoss twins. Maybe it's a family in Dubai that bought 5-10 years ago. Who knows? But somebody's selling it. I think a lot of the selling is coming, or the liquidity for the selling currently is coming from the ETFs. But when they're ready to redeploy that money, boom, prices are going to go up. Ethereum ETF, same situation. We're starting to see massive outflows out of the Ethereum ETF. First time. We've seen these massive outflows. 13 million on one day, 9 million, 80 million, 50 million. And really what I look for is the trend, right? What is the trend? It's not necessarily like what happens on one individual day, because, there could be a geopolitical event, a geo-macroeconomic event, some other situation that just creates a one-day offset. But I really look for the trend, and the trend is we're starting to see a lot more increases of outflow out of the Ethereum ETF. Now, keep in mind, the Ethereum ETFs have significantly less from a dollar perspective. I think I pulled up, yeah. This is the Bitcoin ETF tracker. The total Bitcoin ETFs have about $103 billion worth of Bitcoin in them, or just around there, where the Ethereum has only 7.7, just about $8 billion. So significant difference in amount, right? But with Bitcoin, $100 billion, they removed 1%, over 1%, like 1.2, 1.3% of the entire market cap yesterday, just one day ago, from when I'm recording this video at least. And so again, this is something to keep an eye on. Farsight Investors, they have a X account that every single day they post like what all of the numbers look like. And so this can kind of help guide and understand like what is going to happen when the reversal occurs, when they start to buy up the Bitcoin again. Because I believe MicroStrategy is going to keep buying. And we're going to get back to MicroStrategy in just, well, I guess we'll just go there right now. MicroStrategy has come down 50%, 50% from its record high of about $543. That's what it's showing as the 1 year range. So it looks like we peaked in like the end of November. End of November peaked at about $540. Right now we're at about $255, right? 255 times 2 is $510, meaning we're more than a 50% drop from the all-time record high and the local high, right? The 6-month high. And the reason I'm talking about MicroStrategy so much recently is because MicroStrategy is the key this cycle, in my view, because there is numbers that they can't move away from, and they keep increasing the numbers, and so it's bringing us closer to potential issues with MicroStrategy's basically strategy, right? So right now their average cost value is $66,000 on 500,000 Bitcoin. And so what we've been talking about is they're still selling shares onto the open market to then raise money to then go buy Bitcoin. We know that they just approved the share increase of 30x, right? Going from 300 million shares to 10 billion shares. And basically all of these shares are going to be sold on the market. Now, in an uptrending market, you can sell that liquidity on the market without any major moves in the price, and the price will probably actually go up higher because it looks like there's more greed and excitement in that specific stock. But we're down 50%. Like, what now, right? What now? Well, there's a lot of opinions on this, and so I said, instead of me letting you guys know what my opinion is, because if you've been watching my videos, you probably already know what my opinion is on MicroStrategy. By the way, don't forget to give the video a thumbs up, hit that subscribe button. That way you never miss a new video. We try to upload as much as possible, and the thumbs up do let me know that you guys enjoy this kind of content. So Bitcoin Overflow on X, who's an advocate for Bitcoin adoption and an MSTR bull, he said MSTR has $8.2 billion debt against $43 billion of Bitcoin, a leverage ratio of about 19%. We'll just say 20% for the ease of numbers. He says only $5 billion of CBs, I don't know what CBs are, callbacks, convertible bonds. Only 5 billion of convertible bonds are below their conversion price. So the effective leverage ratio is more like 11.5%. Bitcoin would have to drop 80 to 90% for MSTR to become insolvent. And none of this debt matures until 2028. So let's break this down. I agree what he's saying. I don't think that MicroStrategy will become quote insolvent, right? That's basically like FTX situation. I don't think that we're going to get there. I mean, if Bitcoin drops to like $100, yeah, there's nothing they could do. But even if we drop down below their dollar cost average right now is 66,000. So even if we go to 50,000 or 30,000, 30,000 would be 50% lower than their average cost value. I don't necessarily think it's going to have any major implications in the short term or medium term if they can get the price back up over, a period of, I don't know, less than a year. But we do have to understand that this debt doesn't mature until 2028. But, right, so you can see here, February 2027, September 2028. The thing is, 2028 is the next halving, right? And so anything that happens in the first part of that year, right, the halving is going to be probably around April-ish, early April in 2028, maybe a little bit earlier than that. But anyway, you can't count on the price of Bitcoin moving up at or shortly after the Bitcoin halving. Typically, it takes 12 to 18 months. That's the kind of the key area when the price really moves up, at least based on charting from previous cycles. And so if they owe the money in 2028 and the market is in a bear market, right? What do they do, right? Is the price going to be higher than it is now? Is it going to be lower than it is now? Is the price of Bitcoin going like there's so many dynamics at play here. And so there is definitely risk with MicroStrategy, especially if they keep buying through this bull market. I don't think that they should be buying anymore. I think that they should be raising money, yes. That but they shouldn't be buying in the bull market because it is highly likely, in my view at least, that in the bear market, whenever the bear market comes, if it ever comes, right? Maybe it won't. Maybe Michael Saylor knows that there is going to be a Bitcoin reserve. There is going to be daily buying. There are other countries getting involved. Like Michael Saylor probably would know those kind of things. But that still doesn't mean that there's not going to be bear market dynamics at play at some point in the future that's going to bring the price of Bitcoin probably down below $100,000. So they keep buying above $100,000 and bring their dollar cost average up almost to $100,000. In my view, there's serious issues if we go below $100,000 for multiple years in a bear market. And what is that going to mean for the company? Are they going to be able to continue to raise money in a bear market? What is going to happen to their stock price? Well, this guy, Luke Broyles, who is on X and says he works at the Bitcoin Advisor and the Blockware team, he said, "Dear MSTR Bulls, this is your reminder that you don't want to hold MicroStrategy during a Bitcoin bear market. MSTR is down a solid 50% despite Bitcoin being down only 15%. Now, keep in mind, some of this has to do with the premium, right? So if they own 500, they basically own, let's do the math. 500,000 Bitcoin, and we're at $88,000 right now. They own $44 billion of Bitcoin, and their market cap is $64 billion, meaning without their Bitcoin, the company is valued at $20 billion. Now you can do the math and take how many Bitcoin they have, 500,000, and divide it by the number of shares, which we can do right now. 500,000, and we're going to divide it by, there's approximately 330 million shares currently that are outstanding. That means each share has about 0.1515 Bitcoin, if I'm doing the math right. I am. So that's a very small amount. So if you take this and multiply it by $88,000, you have $133 approximately of Bitcoin currently inside a share of MicroStrategy, if I did the math right, and I think I did. Meaning, right, if we take 133 and we divide it by 256, it's basically 50%. So you're paying a 50% 100% premium, right? Because you're paying $256, but you're only getting $133 in Bitcoin. And the MicroStrategy company, some could argue, is worth $20 billion, but really, like their situation is the Bitcoin strategy, right? But yeah, MicroStrategy is down 50%, but Bitcoin's only down 15%. So there's a lot more volatility in the MSTR stock. MSTR fell 90% or so last cycle. There is a chance Bitcoin rips higher than most expect, in which case a 75% drawdown is likely, meaning like if we get to $500,000, are we going to go back down to 30,000? Probably not. But if we go to $500,000 and we come down to $80,000, I mean, what's the math on that? That's about a 20%, that's 80% drop right there, 75, 80%. He says there is a chance Bitcoin upside is less than what many people hope, in which case a smaller 50% drawdown is likely. Meaning most people are thinking 200, 300, 400,000. I'm thinking like maybe 150, 175. Let's just say 175 or 180. 50% of that is $90,000. But again, remember, if MicroStrategy keeps buying in this bear market, their purchase price is going to go up, their average cost. And so if their average cost gets close, what is that going to mean in a bear market for the stock? I don't think anybody knows at this point. So Luke says either of those scenarios is good for Bitcoin, but especially the former is dangerous for overexposed MSTR shareholders. The important factor is time. Eventually, MSTR will trend towards 1x Bitcoin. Many make the claim that they may have a premium forever, and this could be right, but it is a big claim. If you trade that, which isn't a trade, Bitcoin, you're probably going to get wrecked. If you hodl that, which isn't a hodl, MSTR, you're probably going to get wrecked. Basically, he's saying, right, hold Bitcoin, don't trade it. Trade MSTR, don't hold it. I mean, I would kind of agree. Like, let's be clear, guys. Michael Saylor would say the same thing. And he is not just saying it. Michael Saylor owns 0 shares of MicroStrategy. He put all his money into Bitcoin. He owns like 20,000 Bitcoin himself. He doesn't own any of the stock. So if you think that it's smart to hold MSTR when the founder, the person who's implementing the strategy, the Bitcoin strategy, is literally selling shares on the market and massive dilution to the point of 30x, they're increasing the share size. I mean, I don't know what to tell you. I agree with Luke here, right? Trade MSTR, hodl Bitcoin, not financial advice. He says, love MSTR and buying more for the first time in a while, but make no mistake on the context. MSTR is a beautiful Trojan horse for the fixed income and index funds. Bitcoin is the monetary singularity. The more bullish you are on Saylor's genius with Bitcoin yield, the shorter the runway for MSTR to have double-digit yield. And so, yeah, I completely agree with that. I really do. I think the risk is there. I think that there's a lot of people you can see on social media, they're irresponsibly long in MSTR. They're 100% in MSTR. This is a 10-year hold, 20-year hold. And we don't even know if they're going to make it through the bear market, right? We know Bitcoin's going to make it through the bear market. We don't know if MSTR is going to make it through the bear market. And so, yeah, with a premium as well, that's like somebody during the last cycle saying that they're a grayscale Bitcoin maximalist, right? What did I tell my viewers during the last cycle? In 2020, I made more money trading grayscale than any other asset in my portfolio. Grayscale. And the premium situation was the same situation, right? Some of the premiums were at par, some of them were lower. And so when I saw that the premium went lower, I bought. And then when it went higher, I sold. And it was a perfect strategy. But I was very clear in my 2020 videos, like these are trades. These are not long-term holds. And I don't know anybody who's a grayscale maximalist or has been a grayscale maximalist saying that grayscale is better than Bitcoin. Like if you're an MSTR maximalist, you should be a Bitcoin maximalist. So why are you holding MSTR? You should be holding a Bitcoin. I mean, it make it make sense. Make it make sense. Anyway, Luke also touched on the GameStop situation. He said if GameStop buys $5 billion of Bitcoin at $88,000 and then another $3 billion raised at $110,000, that would give them 84,000 Bitcoin. GameStop has the brief opportunity to become legitimately a financial powerhouse if they act quickly and decisively. They will not. They will not. Guys, again, nobody knows if MicroStrategy is actually going to make it through a bear market with this much Bitcoin. That's number one. Number two, MicroStrategy, their company is Bitcoin at this point. Yes, they have a software business. Yes, they make money from it, but that's not their main focus. That's not their main business. It's cash flow for the company. But people who are investing in MicroStrategy are not investing for the software business. The software business is a good kind of side gig for MicroStrategy to bring in cash flow and have an operating company. It's very different than what GameStop is or what Robinhood is or what JP Morgan Chase is, right? Very big difference. And so kind of expecting, I mean, I saw the other day that GameStop CEO received a letter from shareholders that he needs to really look into buying Bitcoin. I'm not saying that they shouldn't buy Bitcoin at all, especially if they have $5 billion of cash. But I don't know about using all of it for that. I mean, again, these companies, they don't want to trade the market. These companies are not trading firms. Even MicroStrategy doesn't trade the market, right? They're not trading the market. They're buying Bitcoin and they're selling shares. I mean, I guess in a way they are technically trading the market, but they're not like actively trading. They're not buying at certain prices and selling at other prices. And so to expect GameStop to buy at basically all-time record highs, $100,000, or any other company for this matter, and start here, it's very risky. Because yes, you could say over the course of time, it will outpace the rate of inflation and Bitcoin will continue to go up over the course of time. But shareholders are not waiting 8 years to see a Bitcoin strategy come to fruition. They're just not. They want to see it happen now. And so if a CEO were to say, let's start buying Bitcoin now at all time record highs, and maybe the bull market is already over. Like there's a possibility of that too. So if that is the case and we go down or trend sideways for the next 3 or 4 years till the next market cycle, these CEOs are not going to have jobs because the shareholders are going to say, what did you do with our money? You could have invested in the Magnificent Seven stocks and had a better return than what you got on this. And so investors and shareholders are very short term, right? The only reason, in my view, that MicroStrategy can continue to do this is because they have the software business that is making money, right? Overall, the company is in losses, I think, because of I don't know, however they do their accounting with like the depreciation or whatever. But their software business is making money, millions of dollars, by the way. And now they're implementing AI and their Bitcoin strategy as well. So yes, there is a lot of risk, but other companies are not going to do this. They're just not doing it. And if they do, it's very, very small amounts. So anyway, moving right along, MetaMask adds a fiat off-ramp for 10 blockchains to improve crypto accessibility. Now, the reason I pulled up this article is not about MetaMask or that they're adding off-ramps for more cryptos. It's about interoperability and it's about which coins are the ones that people should be looking at, right? I keep getting the question, Cryptoviser, what coins are the top coins? When I read something like this, right, users were previously forced to swap assets into Ether tokens before being able to convert them into fiat money using MetaMask. But as part of MetaMask's ongoing partnership with Transact, the wallet will add support for a total of 10 new crypto markets. These cryptos are Arbitrum, Avalanche, Base, BNB Chain, CeeLo, Phantom, Moonbeam, River, Optimism, and Polygon. And so when people say Cryptoviser, which crypto should I invest in? They're right here on the screen. They're right here. These are the coins that are interoperable. These are the coins that are working for a full ecosystem of blockchain and not siloed in, well, we're Solana meme coins, or we're going to be launching another product in 10 years that will be able to interoperate. No. Guys, this is where the money is flowing into these highly interoperable centers of DeFi. Like we see it happening with World Liberty Finance. What are they buying? They're buying Ethereum-based coins and Ethereum-based ecosystems, or the ecosystems that are highly interoperable with Ethereum. And people ask like, well, why is Tron not here? Why is Tether not here? Why is this other coin not here? Why is this other coin not here? Yes, part of my job is to analyze some of that. But at the same time, I don't care. Like, I don't care. There are over 11 million cryptos. Okay, almost 12 million cryptos. And probably just as many stocks. Like, I'm focused on the top 50, top 100 coins. And then after that, I just start plucking the rest out, right? Celestia. Is Celestia highly interoperable? Not really. Is it getting there? Yeah, but it's not there yet. Is Algorand? Yeah, Algorand is highly operable. Is Filecoin? I don't know. I don't know that much about it. I would have to do a little bit more research. Is Render? Yeah, Render is highly interoperated. It's being used by Apple. Arbitrum. Is Arbitrum highly interoperable? Yes, it's implemented on almost all the different chains. High level of DeFi usage, right? This is the easiest way to understand which coins are investable, in my view. You go to defilama.com and you just look for the highly interoperable chains. It shows you, it'll say Ethereum, and then it'll have little circles of all the other chains that are interoperated with Ethereum right there on DeFi Llama. Those are the coins of the future of finance. Siloed coins, not going to happen. Meme coins, not going to happen. Non interoperable coins, not going to happen. Coins that have no connections to Tether or USDC, not going to happen. It's just that's where we are in the cycle. Maybe next cycle, maybe the cycle after that, but there's going to be 120 million coins by then, right? So then we have to drill down even further. But where is the big money going? This is the question. Where is the big money going? Well, Avalanche Visa card goes live, aiming to further the mass adoption of crypto. So we have a bank literally adding AVAX to their portfolio. Users can spend their Avalanche tokens wrapped AVAX as well as Tether and USDC stablecoins at any store in person or online that takes Visa. This is exactly what I'm talking about. There's other chains that had credit cards or debit cards. They no longer do. Why? Maybe they had no usage, right? So is that bad? No, it means they tested it and they have no usage at that point, right? We're still very early in the adoption cycle for blockchain technology and for crypto usage, right? But we want to see more implementations of real world use cases. An Avalanche Visa card, it's there. Like I said, other chains, they have had their own cards and no longer do. Some have said that they wanted to get cards and they still can't. Avalanche is doing it. AVAX is there. And whether it works out or not, you have Visa, one of the largest card processors in the world, maybe the largest, that is adding Avalanche and AVAX coins because they have to interact with AVAX coins for those payments to be converted to dollars and then transacted. And while all that is going on, we also have Bank of America is going to be launching a USD pegged crypto stablecoin. Now, the CEO said it's pretty clear there's going to be a stablecoin. Moreover, he discussed the stablecoin market, noting their function makes the asset similar to money market funds with check access or a bank account. And so this should not really be that big of a surprise. That's him, that's the CEO. It shouldn't really be that big of a surprise, right? The likes of JP Morgan, they're already using, what was it called? I forgot what the blockchain is called, but JP Morgan has their own blockchain. They have a JPM coin and they are using it. And we've heard Jamie Dimon say, like, private blockchains is great. We just don't like public blockchains in crypto because we can't control it. That's my summary. That's not exactly what he said. But, they're already using blockchain. We also know PayPal already has their own stable coin. And we're hearing now PayPal wants 20 million merchants using the PYUSD stablecoin by the end of 2025. Why do you think that is? Because if they use this stablecoin, the fees to transact drop substantially for these financial institutions. So instead of PayPal paying JP Morgan more money in transaction fees, they get to pay themselves. And so all of the banks are going to be using blockchain. All of them are going to have their own stable coin. Whether it's a known thing or not a known thing, doesn't matter. JPM coin is a known thing. That is basically their stable coin. Whether they call it that or not, look at what a stable coin does and look at what JPM coin does. Yeah. Anyway, you guys kind of get it. This is where the money is moving. This is what you have to look for if you want to make it in crypto, if you want to be in the long-term assets that are not going to be pump and dumps. Because I see a lot of YouTubers posting videos on these very low market cap coins, and as this is the investment portfolio, put millions of dollars in it, put all your money in this. Same thing is going to happen. What happened to meme coins? The big money is moving into Bitcoin and Ethereum. That's it. The other coins, they're kind of just a conversation still at this point, including XRP, including Solana, right? People said, Cryptoviser, you're crazy. Solana's not going below $150. Oh, it did, and it's going under $100, 100%. We have a $1 billion in coin unlock coming up, I think March 1. And we still have a drain occurring in meme coins. Meme coin mania is still underway. There's still not a full exit out of there. And people who've already exited meme coins, they may not have exited Solana, but they will, especially as we approach that $100 range. When we approach $100, it's going to be like maximum fear in the market, and long-term Solana holders are going to start dumping it, especially when they see other coins like Ethereum moving higher while Solana is moving lower, or Polygon moving higher, or Avalanche moving higher as Solana's moving lower. They're going to say, shoot, got I got to get out of the coin. They're going to get out at $100. It's going to push the price even lower in Solana. Then they're going to put it in Ethereum and probably some of the Ethereum-based coins and layer twos. And then boom, it's going to be the price is going to go up because they're going to keep buying. So all the value that's draining from Solana is going to be making its way into Ethereum and other coins. Which ones those are, I don't know. We're going to have to wait and see. Let me know what you guys think down below. I'll see you guys when I see you. And as always, crypto on.